Let's start off by talking about SBI cards. Morgan Stanley has come out with their latest note. Now, they've maintained an equal weight with a target price at 650 on SBI cards. They're talking about how the November spending market share has fallen on a month-on-month basis to 14.9% and on a year-on-year basis 20%. And the impact of the RBI notification on the corporate card spends is also being felt. The aggregate daily spending, though, is higher. Nikunj, just going by the overall credit card and the kind of market share that we've seen here, what's your sense on SBI cards?
Avan, the fact that there is a slowdown is not today's trend, it is yesterday's story. So I don't think there is anything new in terms of what the current trend in the credit card business is. What is important here to understand is that are we reaching that downturn in terms of reaching a bottoming out pattern, or are we reaching a level at which or are we nowhere close to any kind of a slowdown cycle ending for SBI cards or for the credit card industry? I think this is not a cyclical slowdown, this is more like a structural slowdown. And also if one looks at the one is growth and second is the positioning of the NPA. So for the credit card industry, which was growing north of 20%, 25% now, suddenly seems to be slowing down. And B, NPA concerns after what is happening, at least in terms of the pressure coming at the retail level, seems to be very obvious. So even though SBI card has done nothing special in terms of a stock move when it went public during the COVID time, had a great run, has come cracking down, I think there is a bit of a challenge in the entire credit card in the sector per se, both in terms of growth and also in terms of fear of delinquency which could come back in.
Okay, so that's the take coming in SBI card. Fear of delinquency is really having an impact across the financials. But what about Indigo? Because off late we have seen a few upgrades come by. The air traffic data is also out, and the passenger growth continues to be in double digit. 12% year on year is what we have seen in the month of November. Nikunj, it's become a sort of monopoly in the sky right now, right? If you're going to buy a ticket, you pretty much look at an Indigo and prefer buying that.
Well, Indigo and Air India has not really impacted the Indian. They've not really had a impact both in terms of mind share and in terms of market share, even though they are backed by Tata. So Indigo is the one where I guess lion amount of mind share and strong market share gain, it really continues. If one really looks at the air traffic in India, air traffic is actually growing, and it is growing at a rate which is quite quite amazing. So within that, the way Indigo in a sense is positioned, both in terms of new delivery, in terms of fleet arrival, in terms of market share, they're just right there. The last quarter numbers were a bit tardy. They had reported a big loss, things were operationally not looking strong, and that added to the volatility. But this is a peak season for Indigo, and I expect that Indigo and the airline industry will get their mojo back. Within that, till the time serious competition does not come in, till the time SpiceJet is not really able to have an impactful market share, I guess this domination by Indigo is here to stay, and it's real.
Absolutely. Looks like for now it's a duopoly when it comes to the major aviation players domestically.
If you like this video, then like, share and subscribe to ET Now.